Hey everybody, Christoph the Investor here again with another video from Financial Clarity. And if you never traded before or you're just about to get into trading, it's very important for you to start to understand the four trading styles, right? This is one of the biggest issues that a lot of new traders have, is that they're trading and they don't know the difference between position trading, swing trading, and so forth. So let's get into it. And before you start, please like and subscribe to my channel. So let's go. The first style of trading is position trading, right? So position trading is when the trader holds the stocks for a longer period of time. This could be for months or a year, but roughly several weeks at the very least. Position traders rely on the market trends and long historical price patterns to decide what stock to pick based on its expected growth in the long run and the future. Position traders buy and sell investment based on fundamental and technical analysis reasons. They enter and exit trades using the weekly and the monthly time frame, right? So I'm going to show you an example now on the chart of how position traders look at the chart before they enter a trade. So let's go. So here we are. We're on Apple's chart and we're on the monthly time frame, right there, 1 month. So let's say none of this price action happened before. If we were to go back to this time in this area in time, this date was June 2016. We all know we don't want to buy when the stocks are going up. We want to buy when the stocks are coming down, right? So say we made a correction and you look and say, okay, for instance, the RSI is oversold. It's very in line with the RSI, right? All the sells, all the corrections. And you decide to take a position right here. So you buy in right here and you never sold Apple, but Apple will continue to go up, right? So that's what position trading is using the monthly time frame or the weekly time frame to enter and hold trades based on that time frame. This is the 1 week time frame that I just switched on. Not much difference. So what the time frame shows is each candle will be equal to 1 week, because we're in the 1 week time frame. We're in the 1 month time frame. Each candle will be equal to 1 month. That's why when you hold trades on a position trading time frame, you got to wait for the trade to play out. So if I buy in right here on this green candle, $57, for me to get to the next target all the way up here, I'd have to wait 1 week, 2 week, 3 week, 4 week, 5 week for the trade to play out. So the fact that Apple is on an uptrend, it's easier to just take a position and hold and don't sell and ride the trend, right? So let's go to the next form of trading. So the next form of trading is swing trading, right? This is one of my favorites. So swing trading is when the trader holds the stock for more than 1 day. So they enter a trade today and they could sell tomorrow, and that could be considered a swing trade. But most swing trade lasts a few weeks, a few months, right? So as we continue the chart, this could be for a few weeks, sometimes a few months, but 2 days at the very least. Swing traders enter and exit trades based on pivots and swings created by the current market trend in the form of impulse and corrections. They enter and exit trades using the 1 day and the 4 hour trading time frame. So let's look at an example of how people enter and exit swing trades. So let's go to the chart. So this chart I have drawn up here is what I show some of my students when I'm breaking down price action analysis. So the market makes higher high, higher low, higher high, higher low, higher low in an uptrend. Lower low, lower high, lower low, lower high, lower low, lower high in a downtrend, right? So the run, this is the impulse, this is the correction. This is the impulse, this is the correction. This is the impulse. Likewise, this is the impulse, this is the correction, right? So swing traders see the impulse, they wait for the correction to buy calls or enter or buy stock, right? And then sell somewhere up here to take profit. When they correct, they buy calls, they sell as they go up. And that's for an uptrend, right? For a bear trend, when the market make a lower low, lower highs, that's when people enter sell positions. So they enter puts. So they buy puts or sell puts right there, make it lower low, they take profit on the way here, going down. Goes back up here, enter put. Up here, they enter puts again. So to look on Apple, well, let's look at PayPal since we're here. We're on PayPal on the daily time frame. If I start on a monthly with PayPal, from the monthly perspective, if I took a position right here for a position trade example, March 2020, I would have made all this profit going up. Let's see what that profit is. That's 162%, right? But then we corrected all the way back because PayPal is a growth stocks, and growth stocks outperform the market when the market's doing good, but when the market's doing bad, it really outperforms the market doing bad. So let's go down. This is the 1 week. I'm going down now to the 1 day. So even though PayPal's on a downtrend, we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So you'd be entering puts on these swings right here to ride the market going down. So every time it touches the resistance, you enter a put, enter a put, enter a put. Let's go on the 4 hour to show you how it looks different. It looks a lot different on the 4 hour. And I'm just trying to make this video quick, get straight to the point as possible. It looks way different on the 4 hour because you have a lot more candles to work with. So you can see lower lows, lower highs. Let me zoom in. There we go. Lower lows and lower highs. So the market's trending down with PayPal. Let's see if I find an example of a swing trade of a market trending up. Well, this is Nike right here. And Nike is a great stock on the 1 day. So right now on the 1 day, Nike is also trending down. Lower lows, lower highs, lower lows. So I'm going to go to a time when Nike is trending up. So right here, Nike is making higher highs and higher lows. You can buy right there. Or I could go back to a point in time all the way down here when Nike's just been trending up. Higher highs, higher lows, higher highs, higher lows. The 4 hour, you'll see it. Wow, now I lost the chart. Here we go, the 4 hour. Higher highs, higher lows, higher highs, higher lows. Even though they're small, they're still higher highs and higher lows, right? So the third and most exciting form of trading, as I'm saying, is day trading. So day trading is when the trader enters and exits the trade in the same day. Day traders rely on the intraday trend to determine entries and exits. Example, if the daily trading candle is green, this means buyers are in control of the trading day. So day traders will use the smaller time frames to enter and exit the trade the same day. Day traders will use the 1 hour and the 50-minute time frame to choose trade entries and exits. So day trading is the most exciting form of trading, and I'm going to go to show you guys the chart examples now. So do I have any more examples? So let's look at Nike again for day trading. So this is around the 1 week right now with Nike. I'm going to go down to the 4 hour first. And then I'm coming down to the 1 hour, right? So the 1 hour time frame is giving me a lot more candles than of the 4 hour time frame. So what I could see with Nike right here is each candle equals 1 hour. We're trending down, lower low, lower high, lower low, lower high. When Nike made a lower high right here, I could have entered a put trade and ride it come down here, or even right here when it makes a lower low, lower high, right? So I'll show you more trade examples in detail. Right now, Nike broke above this high, so we're making a higher high. So I'm expecting Nike now to make a higher low and then make another higher high, break above the diagonal resistance. So the 1 hour time frame is determine the trend, and you can use the 50-minute time frame, which is more candles, to determine when Nike will break below or break above. Higher highs, higher lows, higher high, higher low. So that's an uptrend. So Nike is consolidating on top of the 1 hour uptrend. So we're in a 1 hour uptrend on Nike, but on the weekly, the larger time frame, we're on a downtrend. So let's look at the larger time frame to show you examples. So 1 week. Here we go. In a downtrend, lower lows, lower highs. So let's go to scalping. So scalping is another form, very technical style of trading. A lot of Forex traders like to scalp. and crypto traders, and you can scalp well as an option trader as well. This is very good strategy. So scalping is when the trader enters and exits the trade within a few minutes to an hour. Scalpers rely on the intraday trend to determine exits and entries. Example, if the daily trading candle is green, this means buyers are in control of the trading day, and scalpers will use the smaller time frames to quickly enter and exit the trade for profit. Scalpers use the 15-minute and the 5-minute time frame to choose entries and exits to trades. So let's look at an example of on the 15-minute and 5-minute. So we already have Nike on the 15-minute for a trade. You go down to the 5-minute, the scalpers use this time frame. Or scalpers even use the 1-minute time frame and the 3-minute time frame. But this time frame is just, you use this type of time frame, these smaller time frames, when you get more experience and more better in your trading journey. Hope you like this video. I tried to make it as quick as possible to respect your time. Please like, subscribe, and share this video. And stay tuned for a lot more educational content like this that will help you in your trading and investing journey. Thanks for watching.